So, hello guys. Happy Thursday. I hope you're all doing very well. As you know, there's a lot of important things that happen in the markets. So, today we're going to be going over the things that have happened in the last 24 hours. And then towards the end, we're obviously going to be looking at the Bitcoin, where it's at, where it's headed, and, some key levels to look out for. So, what we've currently got going on is we have geopolitical optimism rising fast, a major regulatory clash in the US crypto space, and at the same time, price action that doesn't actually fully agree with the hype. And then those three things start to move out of sync, and that's when the biggest moves are about to happen. So, let's break everything down step by step. So, first things first, let's talk about the sentiment. According to data circulating across platforms like X, Reddit, and Telegram, discussions around the war ending have been spiking, not just once, but twice in a major way. So, the first spike came on March 9th. This was when US messaging started suggesting the conflict could be short lived. Nothing confirmed, obviously, but enough to shift expectations. You could actually see it reflected in markets almost immediately, with oil pulling back and risk assets starting to recover. And then we had the second one, which was a much stronger wave, which happened on the 23rd of March, and that's when things became more concrete. So there was a confirmation of a temporary pause in strikes along with a structured US proposal to Iran. And that's when sentiment flipped to maybe like this could actually happen, and markets started to react instantly. So, and now the important part is that crypto hasn't been just going up randomly. It's been pricing in the probability that this conflict actually ends soon. So that means the current rally is built on expectation and not confirmation. And, that creates two very clear scenarios. So if we get an actual resolution, you're likely going to see a sharp breakout across crypto. Fast moves, strong momentum, and a lot of late buyers jumping in. But that kind of move also comes with a risk, because when everyone piles in at once, you often get that, buy the rumor, sell the news effect right after it. So now if things go the other way and talks break down, the market probably doesn't crash, but it gets stuck. So volatility stays high, direction gets messy, and prices start moving in shorter, less predictable cycles until that clarity returns. Now, whilst all this has been happening, there's another major development that could impact crypto in the longer term. Coinbase has reportedly told Senate offices that it cannot support the latest stablecoin yield compromise due to concerns over the proposed language. And this is important because stablecoin yield isn't just a feature, it's a core part of how platforms attract users. If regulations limit that, it could reshape how capital flows into crypto entirely. And at the same time, we're seeing new players move aggressively. Mavan just announced it's live and positioning itself as potentially the largest single entity staking operation. So while regulation is tightening in one area, competition is expanding in another. So that tells you that the industry isn't slowing down. It's adapting and evolving, like we mentioned in a couple of videos back. And now let's connect all this to the actual price action. Yesterday's targets were hit cleanly. The move played out almost exactly as expected. And importantly, it happened in sync across both Bitcoin and Ethereum. So that kind of alignment usually confirms the structure is valid. But, and this is the key, the downside isn't finished yet. For Bitcoin, the next target sits around 68,800. And that is Monday's low. And right now, it's acting like a magnet for the price. And as for Ethereum, it has already broken below its equivalent level, around 2,100, which shows relative weakness. So now we've got divergence, and these don't usually last long. So either Ethereum recovers quickly or Bitcoin follows it lower. So this is an alternative setup that we've got going on here. So we can see a short-term move back into the 70.6 to 70.1k range on Bitcoin. And that would be the fair value gap, which is obviously here. If that happens, it likely acts as a liquidity grab. a temporary bounce before the continuation lower. So instead of a straight drop, you get a fake move up. And that's when the real moves begin. So that is the current breakdown of Bitcoin, where it's currently at, some levels to look out for. So now, if we were to zoom out, what we've currently got going on is macro optimism pushing markets higher, regulatory uncertainty creating pressure, and technicals pointing to unfinished downside. So that combination doesn't resolve quietly. It builds tension, and tension leads to expansion. So heading into the next sessions, keep a close eye on that $68,800 level on Bitcoin, and that's a level that tells us whether this is a pullback or something bigger. Because once that gets taken cleanly, the next move usually comes fast. So if you found this useful, make sure you're staying updated because things are moving quickly right now. And if you're looking to trade these moves in real time, check out the link I've got for you down in the description below to get started. So as always, drop a like and subscribe if you haven't already to stay up to speed with everything that's currently going on as I make daily videos. Thank you guys for watching and I'll see you in the next one.